What's going on, YouTube? We back with another video, and in this video, we're going to talk about the ticker symbol SPY, same as what we did on the last video as well. And when we tap into this zone here, this is all market analysis. This isn't an insider. This isn't me understanding or having uh, financial advice or guidance or anything like that. That's not what I'm here to do. What I'm here to do is just show my market analysis. This is to help me for trading in the long run, so I know exactly where I've come from. This is for documentation purposes as well, so that we get better on a regular. I'm not the best trader in the world. I'm not trying to be. What I'm trying to do is change my family legacy. I didn't come from a millionaire, but I want millionaires to come from me and potentially billionaires if that's possible. But I just want a different way of living, a different way of life so that I can get my time back. I don't feel like working in the corporate world is the way to go, especially when you're working for someone, you're help building their dreams, and I want to build my own dreams. So I feel like trading gives me that aspect of it. So I've fully lost, I've lost the idea of money, and when I say the idea of it, I mean that what happens is I am I've like gained so much income in such a short amount of time, and I've lost it in such a short amount of time as well. So my sense of money is different when it comes to looking at money and how it's what it's worth and what it processes. So first, let's go here. We're on the 4 hour on the SPY, and I'm gonna mark out that we are currently look like we're trying to move up into an uptrend. So we do have some lows here, but I believe what's happening is we have gave ourselves an indication in the market that we want to continue to go higher, and now the market is correcting itself. So while it's correcting itself at this level here, we're looking for a bounce. And the reason why I say we're looking for a bounce and a break of structure, which is BOS, break of structure. That means a break of structure would be like this created a high here. You see it came from this level up here. It came down. And then the minute that it broke this level here, that was a break of structure. So you could have broke that structure and rode the market all the way up here to the height and got out. And the reason why you would have gotten out here is because of this previous level. So I was actually in on this trade uh, to where soon as I wasn't in on this trade, but I noticed that there was a little bit of pullback. If I scale down to the smaller time frame, you'll be able to see some reversals happening here and some market fatigue. So you see it's not pushing up as high as it did over here. So once it tapped this zone and we had some pullback, I was in this trade here to where the market took a little tank. And the reason why was because I just went by this candle here and I could have held it all the way down here if I wanted to, because the market did return right back down to this level as my analysis predicted that it would. And the only reason why I predicted it was because the market moves in phases. And I just look at it as sellers are up here and buyers are down here in this level. So everywhere down here, there's going to be buyers. The buyers have to be strong enough to push the market back up, and the sellers have to be strong enough to push the market down. But when we come up here, we have a bunch of buyers that are riding it all the way up here, and they're exchanging contracts with sellers. So these are people that did it previously, they sold, because they're taking profit. So take your profit and then it dumps down over here on the side. So right now, what I'm looking for is a break of structure. If we don't break this structure here, which is, I would even mark it. So I believe when you look over here at this level, you can see the closing on this bearish candle, this blue one here, is 681.96. If I come over here to the opening of the bullish candle, it's at 681.96. So that would be my level. I would mark the top of that box to be at 687.90, 681.96. So I'll go 681.96, and that's going to be my level. And down here is going to be 680. And the reason why that's 680 is because you can see up here. Let me see if I can get the candle there. So you see that above, right up here, where the plus is up here, you can see that on that candle, this green one here, 680 is the lowest. That's the low of that candle. So that's why I marked the bottom of the box at 680. Now, as you can see, we're on a trend line. So if we get a bounce here, it has to go below this box. If it doesn't make it below this box, which you should get something similar to here, which let's go ahead and start at. We'll get that right here. I use that a lot. So we're looking for a bounce, a retest, and then a continuation higher. Now there's two levels that you can get in on. You can get in at this level here on that breaker structure, or you can wait and get in here on this breaker structure. If we get a breaker structure here, what I'm looking for is another retest. So I'm looking for this to bounce down here to this level and reject off of it. And then I would have another entry here. That would be my next entry. And I'm just going to ride it all the way back up to here, but I'm going to be cautious in this area, because you can see that we get some bearish momentum. We get that those sellers really step in the market at this level. So the bulls have to be very, very strong to push this, higher, and then get us another retest. So that would be my analysis on that. If we do get some more bearish, push down, some more bearish momentum, then what I'm looking for is for the market to push down, get us a pop up, and then we're looking for a breaker structure, which could return to this level here, which would be a low of 675.77. And if we break this structure and don't hold here, because this is actually, let me do this, because this is another level. So it's not right on the money, but I just want to show you another level here. So that's another level as well. So you got to be cautious at this level because we had a pop up, right? And then you have another level here. So this would be my other level. So you can see we got three levels, but we're on an uptrend. The minute that we break that trend line here that I've made, and it's simply because you can see these lines tapping that line, and every time it taps the trend line, it goes higher. So it's not going any lower than that. But if it does go lower, that means that we have a breaker structure and we're going to continue with a bearish momentum. So all the way down to this level. But if we pop, again, we can get this pop here because we've seen it that it won't pass this trend line. If it pops up and gives us there, again, that line can be an entry, and then we get a pullback, and don't be scared of the pullback, and then we can get another rise to the top. Now, if I were to scale down to the 1 hour, you will see that the 1 hour will line up with that 4 hour. So you can see that 1 hour, there's push from there. It came down into this zone. It didn't get lower than this zone. There's a push up, and then there's a strong push once it gets above this level. So that's why I say if it gets above this level here, you want to wait for a retest, a potential retest. It may not retest it, but you want to wait for a retest to come down, retest it, and then get a pop and continue up to this upside here. So hopefully this makes sense. This is how I will mark my chart out, and this is how I would trade. If there's any tips and pointers that you want to give me, I would love to see that, because I am in the beginning stage. I'm in a year end, and I'm not all the way profitable, but I do paper trade, and when I paper trade, I do very well. But when I have real money in the market, it just creates a little bit of fear for me. So I have to get out of that stage of losing when most of the time that I do get in there, I'm normally watching the charts. So I've gotten advice that says just set it and forget it. And if you do that, I think you'll be profitable a lot sooner if you just let the market do what it do. Like it's gonna do it anyway. So if you just set it up like that and then you just walk away, I think that you'll be better off. So don't allow the market to chew you up. Don't let the fear of loss or the fear of greed get you. And if you do that, I think that you'll make it. You'll make it in the long run, 100%. So that's just my market analysis. Subscribe to the channel for more videos like this. If you're new to trading, let's grow together, and we'll be successful. So I'll be back to talk to you soon with the next video, and we'll try to do this on a daily.